So with us, Mayuresh Joshi, fund manager of Angel Broking, joining in. Mayuresh, positive development for sugar companies, I believe, is expected. The Union Cabinet may look at hiking ethanol prices in the range of 20 to 25%. On back of it, stocks like Praj have already ran up substantially. It was up 3% yesterday. It's doing quite well in trade this morning. Is this a stock you would consider buying if this price hike comes through in the next hour?
So morning, Samina. I think the talk of the town probably is that the prices will get hiked from the 47 odd rupees that we are currently looking at. But a large element, if the hike does come through, yes, I think it does become very, very positive for sugar stocks in general and Praj Industries as well. But again, I think considering the kind of output that can actually come through for this sugar season, close to 34-35 million odd tons, and then you're probably looking at demand being around 23-24 million odd tons, the mandatory exports of around 3 million tons. If this policy is formulated with higher prices, and there is some sort of a mandatory requirement from the OMCs to probably buy this out in terms of blending this for ethanol usage, yes, I think the realizations obviously become larger. Again, I think the stocks that they probably have at their end get disposed at higher realizations. At the same time, you're probably looking at better margins for these products. But it does take time, Samina. So I think for policy formulation, incorporation, making it mandatory, I think this is a time-consuming process. But if they're able to do that, and with elections around the corner, with the timelines in hindsight, you probably can see the sentimental drop-off happening on sugar stocks in Praj Industries as well.
Beyond a sentimental impact, would you be buying into the current weakness for these IT companies, a stock like a Mindtree and NIT Tech, which is down humongous in yesterday's day of trade, a KPIT? These stocks still feature on your portfolio, current prices still attractive?
So obviously, I think the run-up has been pretty sharp for the IT sector as a whole, whether large caps or mid caps. And I think the predominant factors for the run-up, as you rightly mentioned, have been the tailwind through the rupee depreciation against the dollar, and that itself creates a huge impact in terms of their earnings sensitivity. On the other hand as well, I think the kind of digital investments that a lot of these companies have done, both the major and tier 2, tier 3 companies, has been quite substantial, and that has started bearing fruit. So if you probably look at the transformational deal wins that a lot of these companies have reported in sectors like retail, engineering, IMS, we are probably seeing good flows coming through on the digital front. And as these companies are equipped, both the utilization levels offshore and on-site improve. At the same time, I think the attrition levels should start coming down with good order flows coming through. The visa cost, the wage hikes probably inbuilt in terms of weaker margins reported. A few companies will carry forward that in Q2 as well. But a large element in terms of how the rupee actually helps their earnings profile, I think a lot of companies also hedge their book. So to that bit, I think the complete pass-through of what we've probably seen would not translate into their P&Ls. But yes, it does create a huge impact in terms of the translationary numbers that they report. It's not going to be retained earnings. I think all this money that they're going to make is probably going to get back invested into their businesses. Having said that, I think companies with niche products, stroke services, in my opinion, can still continue to do well. So for the sector as a whole, I think we retain a very positive view. The stocks that we probably like and still keep on holding, stocks like HCL Tech, Infosys, from the large cap names, even a Tech Mahindra. And within the mid cap universe, yes, stocks like Mindtree, NIT Technologies, Nucleus Software is something that we ride on.
What are you telling your investors right now? What are you telling, or what are you hearing from other fund managers in terms of what happens next in the markets? It's a very sharp 400-500 point correction that we've seen on our screens. Do you expect this kind of pain to continue, or do you think that markets will now rationalize, the rupee will find its feet even if it's another percent and a half correction from here?
I think that is the hope in the markets, Dipanshu, and a large element in terms of the strong rally that we witnessed over the past few weeks and months. I think the fall that you're probably witnessing at this point of time is for all these concerns probably coming together and for valid reasons. I think the movement in crude, the movement in the rupee against the dollar, what you're probably seeing in terms of the risk that is clearly getting displayed by the 10-year bond yields, I think are a testimony to the tough times that we're probably going through at this stage. Couple that up with what probably happens in terms of trade wars and the related and associated risks, both in terms of emerging market currencies as well as what can actually happen in terms of the global trade, is something which still creates a huge amount of overhang. At the same time, if you look at spaces within the Indian equity markets as well, I think a lot of PE expansion had happened without the earnings growing at that rate. So I think if you merge and synergize both these factors together, you're probably expected to see the softness in the markets continue. And it's a good thing in my opinion, because if the markets do correct and if the P's do contract, you're just 400 points, as you rightly said, from the top. But look at the move that we've probably done, climbing the wall of worries. So if the contraction in forward P's does come back to more levels which probably attract sanity, I think that itself will be a good starting accumulating point. So yes, I think there might be some amount of volatility, some amount of nervousness still continuing in the markets. But any sharp fall, I think qualitative stocks which correct and where the P decline or the deacceleration is quite meaningful and revert back to mean, I think those stocks is somewhere that long-term investors can start buying again. Because corporate earnings, in my opinion, will improve over the next few quarters, which will give the necessary base and support that the markets are looking at.
Mayuresh, I think in the last 1 week, the world has fallen apart for us, right? We've gone from a PE expansion mode to PE contraction mode. Fear has gripped the markets. They're 2 weeks too late reacting to currency markets, but I mean the honest reality is that until about 7-8 days ago, most people, including fundamental technical calls, were all very bullish on the street. We were even eyeing 12,000 in the September series. None of that's happened. It seems like we're headed back to 11,000. The breath is weak this morning. There is a pullback that's underway. Now, whether or not that sustains is going to be anybody's guess. The rupee's decline has been stalled for now. I'm assuming there's been some intervention by the RBI. They've supplied the market with dollars. 70 to 85 is where we're trading at, and of course with some sort of a range on the currency. Equity markets are also recovering in today's trade. We'll take a break on that note. We'll come back. We'll talk